Hello everyone, welcome to the fundamental analysis tutorial series for the Forex traders. So we are going to talk about another topic, so let's get started. Okay, what is fundamental analysis? This is considered as the backbone of Forex trading. People who are into Forex trading, they usually do technical analysis where they actually see the price movement and they see different patterns, price patterns, and for that they use different tools and techniques. But other than that, the fundamental analysis forms the basis of the technical analysis as well. So let's see what it is. Before we dive into what is fundamental analysis, let's look at what are economic and fundamental analysis. What is economic fundamentals? Economic fundamentals is study of the economies of the countries whose currencies are being traded in forex trading. Okay. Then we define fundamental analysis. That fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect currency prices. So let's talk about economic fundamentals in a little more detail. We have fiscal policy and monetary policy. Every country has these two policies maintained by their central banks. So, what is fiscal policy? Fiscal policy is the means by which a government adjusts its spending levels. Spending levels means income and expenses and tax rates. They do it to monitor and influence a nation's economy, and it is the sister strategy of monetary policy. Now, what is a monetary policy? Central banks all around the world have this monetary policy tool to manage their currency and the growth of the currency. Monetary policy consists of the actions of a central bank, a currency board, or other regulatory committee that determine the size and rate of growth of the money supply, which in turn affects interest rates. Monetary policy is maintained through actions such as modifying the interest rate, buying or selling government bonds, and changing the amount of money banks are required to keep in the vault. In other words, bank reserves. The main purpose of monetary policy by the central bank is to monitor the KPIs, key performance indicators. And the three main KPIs are number one, inflation, number two, employment, and number three, growth. Then let's look at the definition again of on fundamental analysis. Fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect currency prices. In addition, what is done in fundamental analysis, there are summary of the data, scheduled times, forecasts, and outcomes of these economic news is available on different online portals, for example, Financial Juice, Forex Live, and Forex Factory. So these are different sources of information that a forex trader uses to complete their fundamental analysis and then apply trades on any tool. In the same way, when we understand fundamental analysis, when there are news about different economic indicators, then what happens? Then there is extreme volatility in the market. Then, because of that, forex traders use those economic indicators and news to avoid taking wrong trading decisions and also with the help of technical analysis. This provides them with a higher risk reward opportunity if aligned with the technical analysis. So, fundamental analysis is basically divided into supply and demand and then economic indicators. When we talk about supply and demand, the supply and demand in fundamental analysis for forex trading determines the price, right? And in the forex market scenario, the supply and demand determines the currency exchange rate. Now, on the other hand, we have these economic indicators that forex traders use the information to streamline their strategy for trading on the different currencies. For example, they analyze all of the factors that affect supply and demand. They keep an eye on events, which is basically economic indicators that could affect currency volatility. For example, increase in the unemployment rate affect a country's economy. It affects the level of demand for its currency. Countries' current or future economic outlook looks good. If it's positive, then the currency gains strength. In the same way, when we have economic indicators, if the economic indicator, a particular economic indicator is positive, then the value of the currency goes high and it's good for the economy. If the economic indicator becomes negative, then the currency value goes down and it's bad for the economy. Then there is also a relationship between interest rate and economy. As the economy gets better, raising interest rates may be needed to control growth and inflation. High interest rates make dollar denominated financial assets more attractive. The value of the US dollar will likely increase against other currencies. Currencies are paired, their performance is determined relative to that of another currency. For fundamental analysis, it is very essential to understand how economic, financial, and political news will impact currency exchange rates. This requires a good knowledge of macroeconomics and geopolitics. And that's about it. Thanks for watching. See you next time. Bye bye.